High inflation in the United States fueled volatility in the markets. The dollar advanced sharply in hopes of a more hawkish stance by the Fed. Oil once again showed an inverse correlation with the greenback and slid amid a stronger U.S. currency across the board. In addition, Brent crude is being weighed down by growing concerns about sustainable economic growth, which is precisely under threat from high inflation. Meanwhile, data indicating a drop in U.S. oil inventories last week continues to support the energy market. The reaction to recent developments is mixed. Traders are a bit confused by strong stockpile readings and signals of a sooner-than-expected rate hike by the U.S. Central Bank. Anyway, conditions in the oil market remain favorable. The short-term outlook for oil prices is rather gloomy, but in the long term, the asset is expected to keep gaining value. On Thursday, OPEC released its global oil demand forecast. World consumption is anticipated to increase to 100 million barrels per day. At the end of the week, investor sentiment seems to be uncertain. Yesterday, Brent crude sank to $91 from $93 per barrel. Today, in early trade, the downtrend has continued. However, it can be seen that buyers are attempting to take the initiative. But following a short-lived rally, Brent crude oil futures moved towards the psychological level of 90. If the price fixes below 89.90 on the 4-hour chart, it will most likely continue its correction from the local high. A delay in entering the market is due to the fact that there is still a risk of volume of short positions could decrease around the 90 mark. In this case, another rebound is likely. Ruble fell noticeably after the release of U.S. inflation data. However, inflation that jumped to a 40-year high is not the only reason for a stronger dollar. Christine Lagarde's comments that monetary tightening bore risks also supported U.S. currency. Thus, this is about a weaker euro, which dragged down all other currencies through the dollar index. Today, ruble has every chance of winning back yesterday's decline. The Russian currency has already pared some early losses. A decision by the Bank of Russia may well lead to a further strengthening of the ruble exchange rate. The day before, dollar-ruble pair reached the area of 74.30, that's the local low of January 12. At that level, the volume of short positions decreased, which resulted in a technical pullback. Due to the dollar's oversold status, a pullback may well turn into a full-fledged correction in case the price consolidates above 75.50. If the price settles below 74.20 on the 4-hour chart, the pair will most likely extend weakness. Gold prices edged down after the U.S. reported data on rising inflation. Like other assets, the precious metal came under pressure from a higher dollar. Its safe haven appeal diminished. In a fairly short period of time, gold prices fell to $1,825 from $1,840 per ounce. Given that interest rate hikes by the Fed are inevitable, the outlook for gold is dismal. In the medium term, the metal may decline to $1,800 per ounce. Gold futures appear to have completed their upward cycle around 1,842 mark, which is slightly lower than expected. There is a risk of further decline in the short term, but it's low. Probably gold's correction was due to a change in trading forces. The levels of 1,820 and 1,810 can be seen as support, where the volume of short positions may decrease. So this was the forecast for today from our analysts. We hope this review will help you decide on further positions and trading strategies. May your trading be lucrative, and see you back soon.